We heard buy Bitcoin. Wow, that's financial advice or not, who knows? We're moving forward we've heard about stablecoins a lot as means of international, interbank and global settlements between banks, source and assets around it. And next up, we'll be hearing about blockchain and stablecoins as payment rails for traditional banking. So I'm very happy to welcome on stage, and it's our honor to have from the State Secretariat for International Finance, Switzerland, Ralph Sutter, on stage. And we also have in this fireside chat, Damien Fontanille from Forge Société Generale, and the moderator of this panel will be Chris McAteer from SIX. So I would like to ask you to come on stage. I hope you are around. Oh, just being mic'd up. Good. No worries.
You forgot to mention Christian Bieri.
Okay, sorry. Yeah, apologies. Christian Bieri from the Swiss Stablecoin. Yes. Apologies. Yes, please take your photos and put your hands together optimally under your name. Yeah, and Katharina Lasota, maybe there is a mistake on my register. Apologies. Obviously, Katharina Lasota from LEXCELLENCE will be also on the panel, and Chris is about to join. Here we go.
Hello, hello, hello. Okay, great. Thank you, ladies and gentlemen. As we heard not too long ago, the volume of stablecoins continues to increase. I believe our colleague from Google Cloud mentioned around the 5 trillion in volume per year last year, but actually I checked just before coming, and it's gone up quite a bit. Last year was up to 15.5 trillion in volume, and even a couple of days saw in the 20 to 30 billion dollars of trading volume in a single day towards the end of 2024. So clearly, it's in the area of surpassing Visa in terms of volume per day. We're seeing lots of adoption. Today, we're going to talk not only about stablecoins, but what makes for effective stablecoins. What are the conditions that you need to consider if you are looking to offer that as a traditional banking facility? What's the use case behind it? We're going to hear from the regulators. We're going to hear from an issuer. We're going to hear from a bank, and we'll get the legal perspective as well. So we have an all-star panel today. It's my absolute pleasure and honor to be able to moderate this panel, and I would love to give the opportunity to all our panelists to introduce themselves. So, Damien, would you like to kick us off?
Yes, thank you very much for the invite. My name is Damien Fontanille. I'm in charge of business development at Société Generale Forge. I joined Forge 3 years ago, and prior to that, I spent 20 years in traditional finance, selling structured product and equity derivatives. Société Générale Forge is the digital asset subsidiary of the Société Générale Group. We started in tokenizing financial instruments, bonds. We moved into launching stable coins, and we are helping the Société Générale Group to enter blockchain and digital assets more generally.
I'm Ross Sutter. I'm here for the State Secretariat for International Finance, where I cover the AML, CFT, and sanctions angle of crypto, amongst other topics. I'm a lawyer and criminologist by training, having worked 11 plus years in the private sector as head legal, head compliance, and all the nitty-gritty part in the past.
My name is Christian. I've joined Swiss Stablecoin about 1.5 years ago. Before, I've been working for 20 odd years in the traditional finance industry, although not in banking, but its little sister insurance. Swiss Stablecoin is a startup that aims to issue widely used stablecoin back to the Swiss franc.
Good afternoon. My name is Katharina Lasota. I'm a lawyer. I am founder and managing partner of LEXCELLENCE. It's a legal law firm with offices in Zug and in Zurich. I have been in the space of fintech for more than 20 years. I've run through as PSD1, PSD2, PSD3 now, recently MiCA. I am a huge supporter of CBDCs. I'm open for discussion about it. But more importantly, I'm co-chair of a regulatory working group within Crypto Valley Association. From time to time, we issue statements where we try to educate and inform, including SIF, or ESMA or EBA or sometimes FINMA. We are open organization and we're looking always for open-minded lawyers. So whoever is here, join CVA and join our regulatory working group. And I'm very much looking forward for the discussions today.
Great, thank you everyone. So we will start the scene by diving right into the meat on the bone with one of our guests of honors, Ralph, and talking a little bit about the regulatory framework here in Switzerland. Can you maybe share with the audience, how does the State Secretariat see the role of stablecoins in the market moving forward?
Yeah, SIF sees stablecoins as one of the means of payment besides CBDCs and tokenized deposits. And what position exactly is decided by the market. What the role of the legislator is not take that decision, but to offer a balanced legal framework, balancing innovation with financial market integrity and protection of the clients. And that's exactly what we're right now working on, together with all the stakeholders of the crypto ecosystem, including private sector, academia, and everyone who is interested.
Could you maybe share with us what keeps you awake at night? What kind of risks is the SIF keeping an eye out on the market?
Of course, having worked as FIU for very many years, I cannot start with AML, CFT, and FCC risks in general, but also, as we have seen, the peg, the stability of the peg is important. So it's important that the mechanism of pegging the stablecoin to the underlying is very important, and the customer should be able to change fiat into stablecoin and stablecoin back to fiat without unnecessary problems. And that's also what we aim to draft in legislation right now.
Great. Not an easy task, but we're working on it. That's right. Damien, maybe moving to you at Société Generale Forge. You've recently, well, maybe not recently, but Société Generale Forge is active in the stablecoin space. Can you maybe give your colleagues here in the banking space insights into what kind of business case you saw? What was the impetus for Forge to dive into the stablecoin market?
Yes, as I said, we started with tokenizing bonds. We did the first digital issuance of the European Investment Bank back in 2021. And to materialize the benefits of blockchain in terms of speed and cost, you don't only need the security, but you also need the cash on the ledger, like Marco from SDX said in a previous panel. So that's what prompted our idea to launch a stablecoin. We did this early on in April of 2023, so it's almost 2 years now. And we foresee really 3 use cases for stablecoin. The first one I alluded to, which is the settlement on-chain, allowing DVP, having cash on ledger together with the security on the same infrastructure. We implemented this use case in 23 with a digital green bond issued by SocGen, tokenized by us, and settled using our stablecoin. AXA Investment Manager used the stablecoin to do that. The second use case, which is most obvious to the audience, is trading of crypto assets with as a pivot currency with other cryptos. So we're listed on exchanges. We're also present with market makers and brokers to be used as pivot currency, but also as a safe assets when the times are a bit troubled in the crypto space. And the third one, which is also widely known, is cross-border settlement, cross-border transfers. Can you move assets? Can you move electronic money? Because under MiCA, This is what stablecoins are to other countries in a few minutes and at a fraction of the cost of what a transfer would be. So these are all the 3 use cases we're working with partners.
Great. So I think that gives us a very good insight as to the why, but maybe touch a little bit on the how. What were some of the biggest challenges you faced that may be valuable insights for the audience here who are thinking of going that same direction?
So we launched before MiCA. So before MiCA was in place. So we had a model that was based on a whitelisting of addresses. So every holder had to be identified, and I think it's still the case for Switzerland. And with MiCA, we moved to a blacklist model. So that was really a game changer for our stablecoin to facilitate distribution. Also, what required a lot of efforts was to get the MiCA license, meaning being an electronic money issuer that comes with a lot of constraints, including the ability for every holder to claim redemption at 0 cost with the issuer, because we're not a retail institution, so we need to rely with partners. But the strength we have with our stablecoin is the backing of Société Generale group. So our collateral is 100% cash account at Société Générale. We publish the collateral on a daily basis, and that gives a lot of confidence for the users. One of the extra use cases that we're seeing implemented is collateral. How can you put collateral that is trusted? And with a good credit, you can have various, in the crypto world, various elements. We start seeing money market funds, but the bulk remains stablecoins.
Being from a compliance background, I took special note of your comment about the move from whitelisting down to blacklisting, so I'll have to pick your brain on that a little bit afterwards. Kasia, maybe if you wanted to share with us a little bit of insights as to how stablecoins are regulated in the EU versus Switzerland. Maybe it's a bit of a basic question, but just to make sure that that's really clear and we've covered the basics for everybody.
Okay, so I will start with MiCA, might be because it's very, very interesting and quite important to know the difference, really. And I have the phone with me, not because it's so boring and I have to read my Instagram account, but
she brought the book. She's a lawyer, so I'll give you that.
Something what we call stablecoin in the MiCA is actually, the abbreviation will be ART, Asset Reference Token. Means a type of crypto assets that is not an electronic money token and that purports to maintain a stable value by referencing another value or right or a combination thereof, including one or more official currencies. We have many reference goods here where the stablecoin is pegged to. Now, in relation what electronic money token is, when we're talking about e-money, means a type of crypto assets that purports to maintain a stable value by referencing that value of one official currency. So we see already the difference. Stablecoin, when MiCA has been developed, the art, which is the way how European Commission and then ESMA and then EBA discussing stablecoin or art has never been meant to be mean of payments. Mean of payments under MiCA is e-money token. And the biggest difference really is that the art, the stablecoin, might be paid, like the customer have claim by market value, if it's included in white paper, and in relation to e-money, there always must be a redemption rights by par value. So that's the huge difference. And yes, I think what you guys done with the e-money license, that's also something. Then in order to issue e-money token, you have to go through a PSD2 regulations actually to get the license to issue e-money token in European Union. You have to go to one national authority and you can passport it through the whole European Union. Well, we have in Switzerland a bit still unclear situation, and we have the discussions actually now. What is stablecoin? How we want to regulate it? FINMA has a very strong approach to it, basically saying, hey, if you want to issue a stablecoin, which you want to treat as a mean of payments, actually you would have to have a banking license. That will be FINMA. I guess SIF has a little bit different approach, taking into account what the economics is about the token, right? And but what I just want to say, I think it will be good to have some more clarity in Switzerland, because if we then at the end want to offer the Swiss stablecoin on European Union market, we need to comply with the regulations there. Reverse solicitation rule, very strict. You cannot simply offer and then say nothing has happened. You need to comply with those rules. You need to have a white paper in place. You need to have a license. And if you don't have it, you can only rely on this reverse solicitation rule that somebody in Europe will somehow, by wonder, will be informed about your project. So to keep the Swiss financial market innovative, digital, I think it's really time to do something, to clarify, but also to keep really in mind that we need to go with the innovation. I like the previous panel where your colleague from STX said, hey, we have a great basics here in Switzerland. That's true, but let's stay innovative.
Mm-hmm. So that speaks to the regulatory framework. Are there specific legal risks that traditional banks need to keep in mind when thinking about offering products and services relating to stablecoins?
Banks in Switzerland in a happy position because they would, by definition, have the license. They need to inform FINMA that they're changing a little bit the business model, but the problem for them is in the balance sheet. How you treat them. Mm-hmm. Are they segregated assets or are they on balance sheet? And if they are, you need to take into account all of the issues related to huge volatility, how much you have to have in reserve to just in case people, all of them will want to redeem their rights, how much assets you need to have in place. So I don't see so many legal risks for the banks. I rather see economic and balance sheet related risks.
Okay, good point. So Christian, I now come to you as our lone Swiss issuer on the panel anyway. What have been some of your biggest challenges in coming to market, considering the regulatory framework or otherwise?
Well, we're still about to come to the market, but the challenges are not necessarily, I would say, technical. Obviously, on the technical side, you have to balance cost, you have to balance scalability together with making sure that your stablecoin is secure and confidentiality is ensured all the time, and you are compliant. The legal regulatory framework is obviously in flux at the moment. We designed our stablecoin from the beginning with the aim to be regulated. That was from the beginning kind of our mantra. And so we kept a close dialogue with the regulator to make sure that we fulfill their their requirements, which means we had to implement a whitelisting concept, and we have an on-chain whitelisting concept, and we work together with regulated Swiss banks for the custody of our collateral and getting a bank guarantee. That's part of the design. And while we think it is possible to issue a stablecoin under Swiss regulation at the moment, it is definitely costly, that regulation, and makes you, in some instances, quite uncompetitive against differently regulated stablecoins, maybe from foreign stablecoins. And it also makes some traditional use cases that you have for a stablecoin, particularly the peer-to-peer cross-border payment, very, very difficult. So that traditional use case is almost off the table. Nevertheless, I think the biggest challenge for us is just simply getting traction and getting adoption, particularly with our focus on the Swiss market. I mean, I hear the 5 billion transaction numbers or even bigger numbers now in stablecoins. But making the traditional economy, the traditional financial businesses, but also traditional real economy, changing from their current payment habits, processes, and means, which generally work quite well. They might be expensive and sometimes cumbersome, but they work quite well, to something new like a stablecoin. That's not that easy. We're working on that. We're trying to find the use cases where stablecoin brings enough advantages so that people want to make the switch. But that's our biggest challenge, I would say.
Mm-hmm. So maybe if we can put a positive spin on that, how do you position your product vis-a-vis the market, given the competitive landscape of CBDCs and stablecoins that are competing for, attention and cash flow?
Well, first of all, I think we don't necessarily see every other option as a competitor, in the sense that I believe Switzerland, for example, as a country, has to come to grips how the payment landscape in the future will look like. And there will be different coins, different types of coins serving different purposes, and not necessarily competing, but rather complementing each other. But we position ourselves then vis-a-vis particularly all the stablecoins and the traditional payment solutions as an efficient, direct payment solution, which, as I said, is regulated, allows obviously instant payment, and allows additional features which current traditional rails don't offer. And that's our positioning as Swiss stablecoin vis-a-vis the traditional and other competitors.
Great, thanks. Okay, so I think given the audience here, maybe what we could do is just a quick round. What would be your top advice if you were to be hired as a consultant by one of these banks about moving forward with stablecoins? What kind of risks, concerns, opportunities would you highlight if you were given the chance? I'll kick it off with Damien.
As of now, you have very few banks that issue their stablecoins. That's the status of the market. You have US banks that did tokenized deposits, but that's the closed-end system, whereas stablecoins have the aim to go beyond your barriers and to circulate freely with the blacklist I alluded to before. So as a bank, we will see more and more banks doing it in the future. I mean, you've heard the CEO of Bank of America alluded to the fact that when regulation comes into play in the States, they will launch their stablecoins. So I think we're going to see banking players entering this market with the use cases I mentioned before. I mean, settlement, cross-border payments, trading of crypto. It's an effort for a bank to enter into stablecoins because you're entering an infrastructure that is not familiar to you. And also, you have to ensure AML, CFT in a freely transferable instrument. So that's why internally we put a very strong emphasis on monitoring the transactions and ensuring that the blacklist is effectively imposed and reviewing these parameters on a regular basis. And that's what our white paper allows us and our regulators. So the banks have to have a clear idea about the business they want to support with a stable coin, select the right regulatory framework you want to step in. You're going to have US, Swiss, European, you have already Singapore, and also find the right partners to distribute and promote it. Because it's not because it's on the shelf that it sells. Yeah. It really has to serve specific use cases in order to see adoption, trading volumes, and AUM grow.
Excellent points. Thank you. Ralf.
Well, as I said before, the Confederation is not taking a decision for the market participants. What we are is neutral with regards to both technology and centralization or decentralization. And we observe the developments in other jurisdictions who have not, the majority of them have not decided on how decentral or central they will move forward, including not only other jurisdictions, but also the multilateral level, the FSB. So as a regulator and legislator, we follow the situation. We try to enable the market participants and take on board their feedback and work with them as you know.
I have to say that the community sort of, and the whole wider Swiss ecosystem is very lucky to have you in that role. For those of you that don't know, Ralf is one of us, so to speak. He used to be the Chief Compliance Officer at Signum, so he knows what he's talking about when he relays the concerns to the regulator about the industry, and he's perfectly positioned as an attaché to bridge that gap in terms of knowledge and help build the bridges in terms of partnerships, which we've been able to do just recently. Yeah.
Just let me moderate the enthusiasm. I'm very thankful for that, but as I have worked in the industry, I have also witnessed all the hiccups, not to speak of the fuck-ups.
So you know our dirty laundry, that's not good. Great, thank you. Okay, Christian, final thoughts.
Well, if you think this through and take the analogy of credit cards, basically every financial institution these days has their own card. The question is a bit, will stablecoins go in that same direction? Will we have in the future a global clearing system, and basically everyone will issue their stablecoin? And with that thought in mind, I think it's time for banks to start looking into these options. And as Damien said, think about what are the use cases for a stablecoin. And we believe, from Swiss stablecoin perspective, we believe there's a lot of use cases you can serve with a stablecoin, particularly as a bank, for your individual customers, but also for your commercial customers, where you can bring value to them by giving them a new technology and a new payment means. It comes with its risks, of course, as you said, but I think at the moment there's a lot of reluctance to even look into that, and that's not what Switzerland and their banks should do, I think, at the moment.
Good, valuable advice. Kasia?
I think I will also add here what Damien and Christian now said. Really, I think the business case is really important, what you want to achieve, because I keep thinking, it keeps me busy for the last 3 hours, because I talked with somebody from another bank here, and this gentleman told me, actually, there is no business case in Switzerland to issue a stablecoin. So it's probably a discussion for another panel. But I really keep thinking what also you just said about comparing credit cards and so forth and so on. And on one hand, I understand the point of the other gentleman. Actually, what we want to achieve, we will have to stablecoin. We cannot actually offer them on European market without complying with the legislation. On the other hand, we need to be there, because if you're not there, then you don't exist. And then it will be UCDCs and only others on the world. And I'm not quite sure whether we all, at the moment, really want to support certain currency with a certain administration located somewhere behind big water. That's my political statement, sorry.
There you have it, ladies and gentlemen. Stablecoins currently represent about 1%, as our colleague said in the other panel, of total volume of US dollars in circulation in the market and growing. So the question is, will Switzerland sit by and watch as it continues to grow and stablecoins are issued in other jurisdictions outside of regulatory reach? Or will the regulators create the environment to foster the issuance of stablecoins in Switzerland? What are the business cases? What are the challenges? Let's see how it develops. Join us next year for the same panel, and we'll see where we went. Thank you.